so the video is going to be based on the current price, or at least today's session. Of course, we are analyzing NAS 100, so the best price action to base this video on is going to be for during the New York session. Okay, so today is the 24th of March, Tuesday, and this is also my time zone I'm using. Okay, and of course, like I said, we will be based on our entries. We will be basing our entries during the New York session. Okay, so how do we find long-term buyers or higher time frame buyers? All right, of course, we have the weekly, the daily, and 4-hour. Okay, this is what I would define as higher time frame. The ones that are lower, the things we can say the 1 hour is as well, but it's not going to carry as much weight as the 4-hour, for instance. So I'll just stick to the 4-hour. All right, and most traders only have access to these time frames. Okay, the 4-1, of course, most brokers, most charting softwares will always have these as default, right? So yeah, so when it comes to determining bias on higher time frame, how would we go about doing this? Of course, there's many basic formats. Okay, so if we take a market like this, I know that traders would sort of look at this chart, okay, and they would build a bias up based on everything that is shown to them on this chart. And I would say that's a big flaw, because let's say, for instance, price had reached this level, the 28th of Jan right here, has got nothing to do with the current price, and you can say that this might have caused price to get to this point, yes, but again, if you're taking a trade for today's session, the liquidity or whatever, something that might be chilling here on the 26th of Jan, the current price is not going to get there. It's unrealistic. So there are many other things that are much closer to today, where the current price is, that should be more prioritized than whatever's going on here. So you shouldn't even be bothered by price action that is way before the current time. Okay, that's one big mistake that traders make, is they just want to have a whole chart, throw lines everywhere, and just waste time on things that shouldn't even be there, right? So again, you can build a bias based on whatever you were taught, okay? And as long as you are implementing things like volume and direction. So if you see, right, where current price is, and you can see the overall outlook upon this market right here, maybe you can go to the daily and you can see that prices are falling aggressively. Well, I wouldn't say aggressively, but of course there's a lot of buying pressure, but it is overall moving to the downside. As you can see, the lows is progressively getting lower. Okay, and based on today's price action, we can clearly see that the market is trending pretty well to the downside. Okay, now a more systematic approach, what we can also say is that if we look at the market like this, here we have a low that got broken. Okay, we have another low right here. Let's use a sell one. Another low, another low, and throughout this entire market, we can clearly see that the market had broke past this high right here with this big impulse to the upside. Now for me, does this mean that the market is shifting now to an uptrend? No. For me, it's just one break, and when it's just one break in, let's say for instance, a market that is trending like this, that is creating lower lows, lower highs, and then the market all of a sudden does something like this, does this mean that I'm looking for buys now? No. This for me is just a liquidity grab. The market is fetching the traders that are in positions right here, and then creating more orders for the market to then continue to the downside. Okay, so that's basically what I see here is happening. Okay, now this is a more systematic approach if that is what you want, right? So here we have liquidity above this high. Now price, of course, as you can see, continued falling. Now where is the next objective for current price? Well, it can be anywhere, right? It can be this high right here, the swing high, or it can be the swing low. Now of course, because we are pushing down and the market is just, grabbing highs, there will probably be an impulse all the way down to this low. Okay, now that I would probably say is a more prediction approach, right, which is not sustainable, because I could be wrong with the market going down, or even if I say the price is going to go up. So it's not good to predict, but based on this current market right here, I'm going to say that price is probably going to push lower. Okay, and sometimes we just have to base whatever we are analyzing, the market has to give us some form of truth, right? And we're gonna have to accept it. So here the market looks like it's going to push lower, but I'm not a long-term holder. It's not like I'm gonna be entering a position right here on a 4-hour time frame aiming for this low. That's unrealistic. This is where I'm gonna sort of show you how you can combine entries on the lower time frames with the higher time frame bias. Okay, now when it comes to entries, right, I know that a lot of traders enter on the 1 minute. Okay, and that's fine. I do not enter on the 1 minute. I enter on the 5 minute, and you can also obviously enter on the 15. Just remember, the higher up you go, the longer it's going to take for your system to set up, for the market to set up, or you might miss out on trades that the 5 minute could have easily represented much earlier. Okay, but there's nothing wrong with entering on a 15 or whatever, or 1 minute even. With the 1 minute, you could be a bit too soon. Okay, or you could be on time, but most of the time, I don't know, it's just like, it depends. You have to back test this on the 1 minute for it to be extremely accurate. But for this instance, right, I'm looking for sells. So what I do now is I just go down the time frames. So for instance, my entry time frame, which is the 5 minute. Okay, so for this entire time, when will I switch bias for the market to give me indication that prices is going to go up now? A lot has to happen for me to switch biases, because remember I said that the market is currently within these two swings, right? So here's the high, here's the low. If the market is going to switch, we need price to push up past this level, and then that is when I'll switch my bias. Okay, so currently we are now within these two swings, and it is more weighing to the sell side. So that is when I'll switch my bias. So in this current time, I'm not gonna look for buys in any way. Okay, so that's another system approach, is that my bias doesn't have to switch just based on the 4-hour structure. Lows, one break, liquidity, and now we are chilling here. Okay, so 5 minute. So what I need now is I need a indication where my window is, which is the New York session, and this is where this indicator comes in, right? So here we have trading sessions, the indicator tab, and that's the one right there. Okay, of course I only enable the third session, which is New York. So I'll be looking for a trade anytime in this blue shaded area. That's when I'm gonna get in the market. Okay, so that's first thing. I'm not gonna be holding a trade after this blue. I'm not gonna be entering before the blue. I'm only gonna be entering inside and exiting inside. So just keep that in mind. All right, so here is today's price action. So how would I have traded this? How would I have executed a sell position in this whole entire area? Okay, so if I'm looking for sells, right, so if we look at the impulses of the session, right, we have an impulse right here, impulse here. That's 1. We can say this is an impulse. That's 2, and that's 3, and here's another one right here, 4. So 4 impulses to the downside. Okay, and again, like I said, we're not expecting price to push down all the way here. That's unrealistic. Okay, so it can happen, but it's seldom. But this is how we are sustainable, right? Even on days when you don't expect crazy volume, like something like this, you can capture price and capture profits no matter the conditions. Okay, so I highlighted 4 areas here. Does this mean there has been 4 areas of opportunity? Absolutely. There was 100% opportunity here. So let me show you how I would have executed this. So before I get involved when it comes to entries, I first like the market to grab some form of liquidity, specifically on a lower time frame. So the market likes to aim for 15-minute, when we're looking at entries, 5-minute as well. Okay, yes, there's liquidity on one, but I'm not entering on the one, so that doesn't matter to me. Okay, so here we can clearly see this is the open right here, which is 3:30 for me, which of course in the morning it's 9:30 for the New Yorkers. The first area of liquidity, if we're looking at this market, where's the liquidity resting? Because we're looking for sales, liquidity is resting above the highs. So here, liquidity, here, liquidity. As soon as market open, boom, grab this high, there's an impulse to take a sell. Okay, we can execute a sell position right there. Okay, now let's say you didn't catch this move here. Of course, do not enter immediately after liquidity has been captured. Wait for some form of confirmation, whether it be a candlestick pattern, a break of structure, anything that could involve entry confirmations. So during the session, let's say I missed out on this sell right here. Okay, that's fine. Understand that every time the market prints highs, there's going to be forms of liquidity. Okay, forms of liquidity. So here is a lie right here. There's going to be many forms of highs, but you don't have to plot all of them, because sometimes an impulse can go for a few of them, right? So because this market went up, grab this one, I'll just remove this one so that my chart is not too cluttered, right? So here, market had pushed down, created scenario, market pushed up, grab this high right here. Would we have sold here? Maybe. If you are a lower time frame trader, there would be a big impulse to the downside. Okay, here as well, boom, market had grabbed the high, wait for confirmation, big impulse to the downside. Okay, and a form of scaling here, you can clearly see high got grabbed. Okay, liquidity, impulse. Okay, here high got grabbed, and high got grabbed as well here. So for this instance, I of course would just ignore this one because the market pushed all the way up, grab this high right here, impulse to the downside. Okay, so of course during a market like this here, you can clearly see plenty of opportunities to get involved for sells. The only thing is here is that your timing, you have to just sit there and wait, be patient, wait for confirmation however you're entering the market. But this is a video to foundationally show you how you can combine entries with the higher time frame bias. As you can clearly see, NAS 100 created many impulses just to understand where the liquidity is lying, because that's where price goes before they continue underlying trend. And then once you find the liquidity points, and then that's where the opportunity lies.